Three, two, one. To the new people that were just added, I want to just do a 5 minutes breakdown. Literally 5 minutes. This is my first. I'll even post this thing on YouTube. Um, and let me speak normal voice before that idiot talks at the phone voice. What do we trade? We trade off liquidity sweep, break of structure, FVG. So now we're going to explain everything here. Liquidity, liquidity sweep, break of structure, fair value gap. Okay, so this is how market moves. Market moves, makes highs, makes lows, makes highs, makes lows, makes highs, makes lows. This is how market moves. And liquidity is basically money. And money rests everywhere in the market in this like chart, everywhere in this market. So that's like literally where money rests. Money rests above highs and below lows, above highs and below lows, and everywhere in between. So when liquidity is swept, it means that the other high drawn of liquidity, it is not drawn. This draw of liquidity, this high, has now been swept above. That means that it has already taken out this high. You get, so some other traders that are just new or people that are learning forex, okay, their own is to trade with the trend. That's why some people come and enter here again and keep going up. But most times, because markets are not moved by people's emotions or people's what people learn, it's moved by how market makers want to make money out of the market. So for you to sell market here when something is costlier here is better than for you to sell it here when it is cheaper. And for you to buy when it is cheaper is better for you to sell when it is cheaper. So when market liquidity now sweeps, so market movers allowed buyers to make this move to sweep so that they will have a better um price entry. They allowed buyers to allow this thing to sweep so that they will have a better price entry when buying, when we are selling. So now what we are going to see in liquidity sweep, liquidity is going to sweep and come back down. So that's basically how I trade. So now I'm going to show you an example. Let me just draw a candle real quick. This is an example of a candle. It's an example of a candle here. Example of a candle. This is a, let me make it green. No. Make it green. This is a bullish candle. That's when market is going up. This is a bearish candle when market is going down. So this is how candlesticks move. Bullish markets, candle opens here. In bullish markets, when it's going up, candles opens here and it closes here. So close, up and open, you get. Then it's now inversed for new markets. So as it's inverse now, it's opening here and closing here. So I think I've been able to explain how candlesticks are and how they move and why they move. They move because makers always want better positions to enter off of. So now let's get this shit out of here. Let's get this shit out of here. So now let's see real examples of liquidity sweep in the market. I'm going to use a chart that I made took profit off of today. Yeah, it was USDCHF. The chart that I took profit off of today. What time did I place that trade? Okay, today is Friday, Monday. No, was it this trade? I doubt it was this trade. It was not this trade. What's this thing that I drop in this group? Let me check it. Um, think I dropped. Was USD CHF now? Yeah, I've not seen that move. I don't know why. But basically, this is how market moves. So where are liquidities? Liquidities rest above highs and below lows. So when a liquidity gets pushed above, example is here. When liquidity gets pushed above here, market tends to want to come back down. Let me look for another better example in the chart. Look for a better example. This is a perfect example. What is this? This is a this is a high. This is a high here. This is a high here. A move up and a move down. Highs consists of a move up and a move down. Lows consist of a move down, then a move up. You remember I said bullish candle moving up, moving down. So this is a high, this is a low. Cool. So what did we see price do? We saw price break above this liquidity. This liquidity here, this draws on liquidity. It broke above this draws on liquidity. It created these other new highs. Then some people would have been like, okay, price is continuing in this upwards direction. Let us buy. So, but instead, what price did is price reversed. So now every time, it's not going to be every time in the market that price is going to do like this and reverse, because if price always did like that, then that means that the whole market would have been like this every single time. Price will go up, come down, go up, come down, come up, come down. So that's literally it. Where is that place? How am I forgetting why I kept things? Huh. So basically here, market went up. So now what are we going to wait for? Remember in the old thing, I said we waited for confluences. Confluences like break of structure, fair value gap. What I wrote initially was liquidity sweep, break of structure, fair value gap, or IFVG. That's inverse fair value gap. Breaker block, other block. Simple. So now that price has gone up and swept this place, okay, so we are now wanting to look for shorts. We are now being okay. Some people will just be like, okay, now since I know that it's going to want to reverse, let me look for shorts. So we need confirmation. We need break of structure. Break of structure is when a candle that's a candle alternates a pattern and it breaks the structure of how market was flowing. This is an example of break of structure. Let me say if market is going in an uptrend, creating higher highs and higher lows, higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and then market now breaks below this low. Market has broken the structure here, then it keeps continuing. You get, then that's break of structure in the upside. Then there's break of structure in the downside where market is making lower highs and lower lows, lower highs and lower lows. So when market breaks structure here, market now breaks structure against this high. So that's a break of structure in a low time frame. And there's when market is also consolidating, when market just goes up and down, it's stuck in one path. So when market breaks any of these ones or up any of these ones, we know that's a break of structure. So break of structure is literally in the name. It means break of structure, literally. Break of a structure. You know how to make structures and we know how to break structures. Just like, yeah, very easy to understand. God, I keep forgetting where I put those things. Uh-huh. Where is that move? Okay, I see it here. So now, market was in an uptrend, as we can see, creating higher highs and higher lows. A high that is higher than this high, higher highs and higher lows. Higher highs because this high is higher than this high, and this low is higher than this low. So that's higher highs and higher lows, higher highs and higher lows. Normally, the market was supposed to come back here and create another higher high, but it broke structure downwards. So it broke structure when this candle, a candle closes below the previous lower higher low. So this is where kind a market broke structure. So now market has broken structure here. Cool. And we can already see that an imbalance has caused. Now we see the kind of power that um how do you call them, sellers have. We see the kind of power that sellers have. Sellers have enough power here because this is where they created power. Like this is their power zone. We can see selling candle, selling candle, selling candle. This is where they created enough power in the market. So now this is the confirmation we use. Where is that this thing? So liquidity sweep. How do we have a liquidity sweep? Basically, yes, we did have a liquidity sweep. Um, break of structure. Do we have a break of structure? Yes. Fair value gap. Did we have a fair value gap? Is also like an imbalance. So this whole box is a fair value gap. This whole box is a fair value gap. Did we have a fair value gap? Yes, we did. We had a fair value gap. Inverse fair value gap was not necessary. That's why I said or inverse fair value gap. So we can use just liquidity sweep, break of structure, any of you can as far as the liquidity sweep, if any of these other confluences align, you get that is literally your entry signal. So now these confluences have now aligned. We are now like, okay, cool. It has given me a break of structure. So now I'm looking to aim higher. So we are going to put our entry here. We are going to go for a short position. We are selling the market. And where are we going to be targeting where we when we sell? When we sell, we are going to be targeting these previous draws on liquidity. So we are going to be targeting here. We're going to be targeting here. So boom. Like that, that was 86 pips made from that single trade. I never entered that trade, but this trade is looking very, very good. And I did not even enter this trade. What time was it? This was Asian session. This was 4 o'clock. As you can see the time down here was 4 o'clock. Four in the at night. No, it's 4 in the afternoon. Maybe I was somewhere. But it's a Monday. Okay, I wasn't at home on Monday. So that's how that trade went. Literally most of the time. Let me look for another example. Okay, you can see this example. I literally took this trade. Let me buzz down. Let me buzz down to the 5 minutes. Okay, I literally took this trade. See this here. I literally took this trade because what did I see in this trade? What did I see that made me enter? Let me buzz down to the 1 minute so that you guys can see everything. And we are taking our trade off lower time frame zone because we are now most people might not have the patience to wait that long. So what did I see in this trade that made me enter? So cool. We saw this was a draw on liquidity. What did liquidity do? Liquidity swept it. What do we wait for now? Break of structure. That's the previous low. What makes a low? A move down, then a move up. Move down, then a move up. So we marked our break of structure here. Cool. What happened then? Sellers had power. Sellers created an imbalance. This imbalance is from this previous week here, from this previous week up here to this place, this other week down here. Book cool. So what do we do now? We wait for that area to get filled. This third candle comes back and fills this area. What do? We put our sell. Then where do we aim from? Where do we aim for? We aim for all these draws on liquidity. I try to profit early because I always take profit 32 pips, 30 pips, 50 pips, 100 pips. I don't like taking profit at odd numbers. I always like taking profit at even numbers. So I could have easily just set my entry to be here, take profit. and I would have made at least 52 pips. 52 pips take profit. Literally happens on every single time frame. Let me go to the USD CHF. Okay, I think that's all. 15 minutes is long.